people, I hope you're all okay. Luke back with another Sunday Sessions video. In today's video, I'm going to go over 3 Forex pairs for you guys. So we've got Great British Pound USD, we've got AUD USD and XAU USD. What I'm going to do, as always, is show you my analysis, my rundown on these markets, how I'm looking to trade them in the coming week, and then I'm going to pass you over to James, and he is going to do the same with some of the pairs that he is looking to tackle next week. If you do go on to enjoy the video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated, and if you have any feedback, don't forget to leave that in the comments. If you haven't done already, go and check out our trading couch video. It should be up live on the YouTube channel now.
It's so bad because I feel like most people now, they want that talking stage for so long to get to know meet up. But it's fair because in today's society, it's a lot harder for girls to do that and women to do that because of the way that men are becoming.
What we've been doing as of recently is talking about more generic topics, ones that people can relate to. So I think you'll go and find the latest episode is actually quite interesting. So go and give it a watch, and don't forget to leave some feedback on that video as well. Now, without further ado, let's jump straight into my analysis. So today, as I say, we're going to go over Great British Pound to the US dollar first. As we can see here, we placed a position on this last week. This was a brilliant opportunity and a brilliant trade placed. This offered us with some brilliant returns, and I'm still yet to upload the top trades of the week video where I showcase exactly how and why I entered into this market. So stay tuned for that and look out for that video. But moving forward, how are we looking to tackle this market this coming week? Well, as we can see, this market is predominantly bearish, so we do want to be looking for those longer term sell positions, but there is no harm in looking for those shorter term buy opportunities. Now, do I feel like that's going to be presented to us this coming week? Absolutely. What we have seen is price actually clear liquidity from this order block that was presented here. As we can see, this obviously introduced a lot of supply into the market, which pushed price lower, clearing any remaining liquidity to the downside here, introducing more demand into the market. Now, I'm led to believe that this consolidation or this pause in the market, this slowed volume, is down to this unmitigated area that I've had highlighted from the lower time frames. Now, I'm led to believe that this is what is going to reverse the market and actually push price higher into this zone that I've highlighted. So if I was you, I would highlight this zone as well. These are the parameters. What we're wanting to see is for price to trail us into this zone where we can then look to be sellers yet again longer term in this market. We want to be looking for those buy opportunities that trail us into this point of interest. So what we would need is a break of structure to the upside in order to give us the bias and confluence that price is actually going to trade bullish into a zone that hopefully is this one. If not, maybe one that's slightly higher. So in order to get the ultimate confirmation, we would want to see a break of structure from this high potentially. If not, we could look more fractally, but that would offer more risk to our position. So we could look to get involved once we start to see bullish structure like so. But that does mean that we hold the risk that price could then actually continue going bearish like this, and then we would obviously be stopped out from that trade. So in order to get ultimate confirmation and in order to be as safe as possible, we'd want to see bullish structure, trade us in and above this structural high here, breaking structure to the upside. Then we can look for that pullback where we can then look to get involved in those buy positions that trail us into our higher time frame point of interest. So it would look something like this. We would have bullish structure, breaking structure to the upside. We would highlight and find a point of interest, a smaller time frame point of interest that holds potential orders that are going to propel price into our higher time frame point of interest. This is where we can look to get involved in those buy positions. So we would have our entry here after we have been presented with a fractal BOS to the upside. I would take profit at this zone here, and then our stop loss would be set just below the structural low that gets created. As we can see, this here would offer us a 1 to 8 RR returns, and this is obviously just going based off theories, but logically this could offer us with some brilliant returns where we could then look to be sellers longer term in this market. Now moving over to the AUD USD market, as we can see, this was another trade that we placed here. I am going to do another top trades of the week video based on this analysis and this rundown, so again, look out for that video. But how are we going to look to tackle this market this coming week? Well, again, this market is very much bearish, so we do want to be looking for those sell positions, but there is no harm in looking for those temporary buys. So with that being said, what we are going to want to see is price trail up into a point of interest that we have found and highlighted. So we've just zoomed in a little bit, you'll see that this represents an order block here, where I believe price is going to want to come up to in order to continue pushing the market lower, creating that higher time frame structural lower low. What we have seen as of recently is price actually tap into a fractal point of interest. So now I believe that price is actually ready to take that hike into our point of interest where we can look to be sellers in this market. So again, how can we look to get involved this coming week? Well, we do want to see a fractal BOS to the upside in order to get involved, but to have that ultimate confirmation, again, we would potentially want to see a BOS from this structural high here, then look for that pullback and then look to get involved in those buy positions where we can then trail it all the way to our point of interest and then look to sell longer term. Great British Pound to the USD and AUD USD offer very similar structures within the markets, as both pairs have USD as their quote currency, so we can expect that their behaviors and the way they put their footprints in the market is going to be somewhat the same. So again, that is my bias for AUD USD, looking for those buy positions this coming week. We have seen price tap into a point of interest. Now we just need to wait for the confirmation in order to enter. So sit on our hands, wait for that confirmation, and then we can look to get involved in this market. I've highlighted this zone here, so if you want to take note of the number of the zone and whereabouts it is in the market, take a note of these figures, put them in for yourself. Look on the 1 hour time frame, you'll see this unmitigated candle here, this last green candle before a heavy sell-off. That would suggest an order block where we can obviously look to get involved in those sells. Now finally, moving over to XAU USD, another successful market that we've been trading as of recently. Again, how can we look to get involved in this market? Well, I was expecting this pullback. I predicted this in the Learning Lounge group chats. Unfortunately, I predicted it to come somewhere around here, so we were a bit off in terms of the zone, but price has come to play out exactly how we wanted it to and exactly how we expected. Now price has done what we expected. We have then seen bearishness put into the market, and we want to see this continue in order for us to hit our final take profit target down here of 1681. Again, how can we look to get involved? Well, I have highlighted a zone, so again, highlight this zone yourself, guys, because this does represent an unmitigated area within the fractal structure. What I'm wanting to see is price trail into this. Now, there would be no point realistically looking for those buy positions just because price is evidently so close to the zone itself. We are looking at about 40 pips difference. Now, if you wanted to get involved in a small buy position, by all means do so. But we are going to be looking for those sell positions quite soon into the open on Sunday evening. Now, in order for us to get involved in these sell positions, we'll need price to penetrate this zone and present us with fractal breaks of structure to the downside, where we can then look to get involved in any kind of fractal pullback. As we know, XAU USD offers some extreme volatility and very high volume candles, so we want to be very specific with our entries, and we need to be precise and quick at getting in and out of the market. So again, highlight this zone, as I said, keep an eye on the market. As soon as price has penetrated this zone, presented us with the break of structure we need in order to execute our positions, get involved in the market with your stop loss above the structural high created, and then have your take profit set somewhere around this area. That's what I'm going to do. By all means, with this information, do as you please. As we say, this analysis is for you guys to look at. You know, put with your analysis. If it coincides, great. If it doesn't, obviously look to adapt the analysis we've produced or let it be a tool to better build your own bias within the markets. But yeah, as a whole, that is me for this weekend. I am looking to be a seller predominantly in this market, looking for those potential shorter term buy positions in both Great British Pound USD and AUD USD. As for XAU USD, I don't think there is going to be much opportunity to get involved in buy positions as our area is so close. But once we have the confirmation to enter in those sells, I will be looking to get involved in those sell positions. Now, as always, my analysis is quite brief. It is quite straight to the point, just how I like it. I think this way you are seeing zones, you're seeing specific areas. You can then go to the charts, look at it for yourself, implement and add any of these things that you need to or want to in your own analysis, and then come Monday, you can use that as a tool or as a guide to help you place your own positions. Now, I hope you've enjoyed my analysis. What I'm going to do is pass you over to James. He is going to run over some of the pairs that he is looking to be trading next week, give you his rundown, and give you some specific areas to keep your eyes out for. Now remember, if you are enjoying the video, don't forget to leave it a thumbs up. Now without further ado, I'll pass you over to James.
Hey everybody, hope we're all doing well. James here from LAGFX, and today I'm going to be starting off on the euro to US dollar currency pair. So just a reminder, obviously we have surpassed this low in the market, which in turn should make this a protected high. Therefore, what's happening within here is we're seeing this as an impulsive wave down, which has surpassed the previous low in the market. We've created that lower low, and therefore a correctional wave could be created at any point. Now, it's hard to determine exactly where major structural points lay within this market, but at a first glance, on this time frame at least, the most relevant structural points that we can see, probably something along these lines. So, with the break of this high, that is a change of character to the upside. Since the break of that high, we can see that we have been trading bullish upwards with impulse correction, impulse correction, impulse, where the impulses are creating new higher highs and the correction waves are creating new higher lows. So, clear bullish structure. However, we need to determine exactly where within this overall impulsive wave down is price seeing as a target before it reverses. So if we just look very quickly for some buy to sell regions, we obviously have this region there. So the rectangle tool, we have this buy to sell, which acts as a supply zone. Potentially have something up in that region, which we will touch on in a moment. We have this buy to sell, which it appears price has actually tapped. And then potentially we have, I'm just using the wicks here to see exactly what has been mitigated already. Seems everything in that move has. I would probably say there is a hidden zone that remains somewhere inside of there. Now, if we go down to a 15-minute, quickly make sure that these zones are refined. Yep, right here. That one is fine. Just browsing over it. Yeah, okay, so I'm happy with that being a zone as we have some inefficiency paired alongside. Now, the one thing we are going to focus on is this zone right here, which this is the proper last buy to sell. Price is tapped into that. So looking inside of these as our targets, that is what we would have identified. We see that price has tapped the first target out of that and has since made a heavy volume push down. Therefore, what we need is to see the break of this low to confirm that we are disregarding this bullishness, and if we are disregarding that bullishness, it's confirmation that we are making a move lower. Now, if we use a simple supply and demand balance supply and demand analysis, we're going to argue that, okay, well, within this, we had pretty much one of the shortest correction waves we could have had here.
since a change of character that was delivered from the break of that high, we've had a very small pullback. So obviously in the scheme of this being our impulse, if we compare the size of our impulse to the size of our potential correctional wave, we see that there is a huge difference. And the fact that our correctional wave is so short is a great indication that supply is still heavily dominant and prominent in the market, and therefore longer term there is much more of a cause for price to go lower. So this is something that I would remind you all to do in the market, something within Wyckoffean's concepts that he talks about a lot. Do a supply and demand analysis so that we can realize within this that the correction wave is very short. The bullishness within the correctional wave we see has very deep pullbacks, and therefore is an indication that price struggled to make this move higher, and therefore is an indication that overall and longer term supply is still heavily outweighing demand. Therefore getting involved in sales should be smart in the long run. So just need to see this low get broken, and therefore is confirmation that the bullishness is confirmed to be over. So we add an alert at that region. We would then want to see price surpass that level. We then look inside of this move down for any potential supply zones that price may decide to reverse back up into, which I will quickly do now, and I will cut to when I have done so. So those are 3 refined zones that I have identified through the use of the 15-second. Now, I don't know if this is something I've discussed on the channel, but you pretty much have 2 options when it comes to identifying zones. You're either using hidden zones through the refinement process by identifying them on a lower time frame, therefore having them more refined, or we simply stick on the same time frame that we're using and identify the unrefined zone. So obviously this as an unrefined zone would be this last buy to sell region. Again here we'd have this last buy to sell region, so on and so forth. I have opted this time round to actually refine them quite massively. The downside to refining zones is the likelihood of them being tapped is slightly less because it's such a refined area in the market. For example, this one right here is a distance of 1.3 pips, and for the institutions or smart money operators to stop and reverse a market within a 1.3 pip threshold is quite difficult. Therefore we have to be a lot more lenient and aware that that may happen. But nonetheless, you can do your own process on deciding where you'd want to get involved in the market at. But the point being, we want to see the change of character delivered at this level. We would then want to see price deliver a correctional wave back up in order to indicate the fact that we are now starting bearish and deliver us with an entry opportunity. So obviously the only target we're looking at as of current is this low right here to be broken. If we zoom out and go to potentially the weekly time frame, we can then see that potentially even see price come in to run those lows. If we actually go over to this market, I believe we have a lot more data. Yep, here we go. In the market now, what we can either see right now with price is that we either have a target for price that it wants to come down and trade us anywhere within this potential last sell to buy, which is a very unrefined zone right here. Let's even go to a monthly just to make this slightly easier. So we're either going to see price trade us down into this region, or price is going to break this low and therefore discontinue this overall bullishness. Obviously we've had impulse, correction, impulse, correction, impulse, each impulse again creating a higher high, each correction creating a higher low. Now in order for this overall bullishness to continue, we'd want to see price reverse in this zone, as this is the last possible region that it could reverse at, the overall sell to buy of this impulsive wave that was created. If not, and we see price run this low, then who knows how long we may be bearish for. So that is the overall bias, overall analysis for that market. Now we'll head on over to the US dollar yen. This market has been rather strange as of recently, and I've been unable to determine whether supply or demand is in control, because what's happened is longer term, we had this as an overall impulsive wave down. We've had many reaction to supply zones in this region within the correctional wave. We started trading up towards the overall and first zone that was created of this impulsive wave. We see that we had signs of the reversal. We had price breaking the protected low after the tap. We then had a slight liquidity sweep, change of character to the downside, which came to tap into this demand zone. From there, I assumed that because we tapped a demand zone, we are going to shorter term react to demand zones, as demand is obviously in control through the tap. We've had many taps, slight clearances of the zones, but many taps nonetheless. However, we have disregarded the fact that supply is in control. So good confirmation there that demand is in control longer term. We're going to break this liquidity high, continue trading upwards, and therefore identifying and getting involved from demand zones moving forward is probably the smart move. We see, however, that price is very much sweeping a lot of the zones I am identifying. Obviously, I have refined the majority of these zones and we're still getting reactions from the region of the zone, but evidently there is A, not enough institutional control, and B, not enough volatility in the market as of current to really trade it effectively. Therefore, I'm going to assume that we may stay range bound in this region for a little bit of time, and then the second we break out to one side, have more volatility introduced and better trading conditions, that is when I'll be looking to take more trades in this market. Because looking at this now, there's no obvious region as of recent where a demand zone would lay. I see a lot of wicks here. The only region that I would argue is this sell to buy right here as a demand zone. So I'd put an alert at 136.663, I believe that is. Potential reversal from that, but as stated, when a market is range bound and reacting from both sides, I prefer to allow price to play out for a while until there's a more clear bias, and I would probably suggest you do the same. Regardless, that is going to conclude my section of this week's Sunday session video. If you enjoyed the analysis, please leave us some feedback, hit that like button or subscribe. If there's any videos you would like to see from us in the Learn to Trade series, so anything you hear or see within these videos that you don't quite fully understand through the concepts we use to trade or terminology we are using, let us know in the comments and we can cover that in a Learn to Trade video. Regardless, I hope you've enjoyed nonetheless, and we will see you next week in our next Sunday sessions video.